Hello traders, Vic Shaheen looking at Roku by request. I did a video recently so you can go back and look at it. I don't remember what I said. Most likely it was gold. Anyway, so the question here came from somebody, a friend, a longtime member. Speaking of members, first, join the YouTube channel, is free. At the end, there'll be a pop-up. Click it and put the alarm that tells you I posted videos. And also, there's a link down below to the chat room. We do really good work. A big team now, and all kinds of eyeballs, all kinds of tickers, from pot to regular mega caps to micros and all of that. So anyway, commercial over. Back to Roku. The question is, can you give me an opinion on Roku? I have a lot of opinions on Roku. And also the second part is, then came back with the question, how do I defend? So I'm like, okay, so they own stock. They said they own stock. So nothing here is recommendation. This is me saying, here's how I would trade Roku based on the charts and based my opinion of the stock. First of all, I don't like the stock from the fundamental basis. Don't hate me for saying it. This is a company that is not young. It's been in business for 17 years, maybe plus or minus 1 year. And they still don't make profit, and they so it's expensive from that. It's not so expensive. It's a growth company, so I don't want a cheap growth company, but it's about time to make money. So, but against that, you can say only the last few years have been conducive to streaming. So for that reason, I don't short it based on my thesis. That's it. So somebody's long. How do they protect? First, if I'm before I say that, I need to check the levels on the chart. There's plenty of information. This is a daily chart, about a year's worth of data. The good news is it's holding a level. The bad news is it has to hold the level, otherwise some bad shit will happen. And let me put it, I am not calling for this, but if they don't hold this level, and the level is a zone, the VIX is over 30, so there's no hard lines in the sand. Although there might be, but it's hard to pick them and rely on them because, you know, the S&P is moving 50 points either way in minutes. So it's hard to bank like I usually do on this is a level I can bank on. So it's a zone I can bank on. And I can tell you that it needs a bounce. Otherwise, some bad juju would happen. I'm not calling for it. I'm saying caution. So that's okay. So I need to be open to protection. So people are afraid to spend money on protection. I own a house, I own a car, I have myself. I don't think twice about buying insurance for all of these three. And if I don't crash, I don't cry about, oh my God, I wasted my insurance premiums. If I get sick or I don't get sick, I was like, oh my gosh, I can't believe I didn't need an operation. It's if I have an asset that's worth thousands, tens of thousands, 100,000, $1 million in assets, how can I not buy insurance? Unless I'm a pure gambler hoping for the best, especially in a company that still needs to prove itself over the long term. That's my opinion. So wasting, quote, money on insurance is not an idiotic thing to do. It's not. It's smart. Okay, so having said that, somebody can, and they can draw a nice line here to say, okay, I'm waiting for this line to break. So this is just the helicopter view. I need insurance. This was an emphatic rejection of whatever the hell they said on earnings. I thought they grew and all of that, and it was happy, and they spiked. And I thought the spike should have been shorted just based on the chart itself. And boom, now it's back down. And now it needs a hold. So usually the market, without new information, will trade the range that's been going. So the range is up here to down here for this period of time. But to get smarter is, first of all, the simple way of buying insurance. I can either sell calls against my asset. That's a little more complicated because it's a covered call. I'm not shorting the stock. I'm just putting it to work. So if I don't think that Roku is going to go through 150 for the next 3 months, I can sell a 150 call if there's premium up there. I haven't checked, but that's the concept. I collect money today. It gives me a little buffer in case it falls further. It stops the bleeding for a few days. The whole market just had a huge test, so that might be one way to do it. The opposite way to do it is to buy puts. The options, this is the best time to learn options. Can't believe that how do people buy insurance without knowing options? If somebody has $3-4 million portfolio in the stocks and they don't know options, how the hell are they buying insurance? They're not. So it's like somebody driving a car, really expensive car, with no insurance. It could be stolen. It can crash. Literally. How do you not have insurance? It's freaking cheap and so easy to do. Click of a button. It doesn't need a giant. The worst you can do is waste your insurance premium. Okay, so if you don't buy insurance when things are this iffy or at all-time highs, when do you buy insurance? So anyway, to buy insurance in the options world, you buy something called a put option, and it's basically you lock in your bottom price. If I don't want to suffer losses below 90, I'll buy a $90 put for a period of time. I can choose weekly, monthly, one for next year. You know, they get more expensive way out in time and closer to current price, because you're telling the person, you take the risk immediately. At the blink of an eye, you take the risk, versus, hey, I'll take some pain. You take it off my hands from here on down. So if I buy an $80 put, that means I'm willing to lose down to 80, depends on my entry price. And then after that, I want somebody else to take it. So somebody else will do the homework and say, you know what? I'd love to own it at 80. I'll take it off your hands. So they sell that put that I'm buying, right? So that's how it works. Very simple concept. I can buy a put to say, I don't want to lose a penny below this. What's my maximum risk? The money I pay out front. So the VIX is at 30 or whatever it is right now. That makes everything expensive to buy. So that put is probably 3 times as expensive as it should be under more normal circumstances. So a better way to do it is to do, not a better, a cheaper way to do it is to do a put spread. So I can buy a 95 put or a 100 put and sell one below it. So if it goes to 0, I make some money, but not stop the bleeding completely. So I can choose the width, and all depends on the size of the risk, the personality, what I'm willing to take in pain and whatever. So for what period of time do I buy it? If I'm buying a spread, a put spread, so if I buy one and sell one, I take it out in time. They cost the same at the money or close to the money for the ones that expire this week or the one that expire later on. Plus, the high VIX doesn't really affect it as much. It's always going to cost about half the width of the spread if I buy it at the money. So what does that do? That takes money out of my pocket, but it tells me if Roku drops another 10%, I'm going to make some money. So that stops the bleeding right away. So what's the risk? The risk is me losing the premium or some of it. Roku is not going to crash to 160 from here, crash up. It's not going to crash up to 160. Very rarely do they do that. They usually rally hard, but they start to rally with plus 1%, plus 2%, plus 3%. In which case, that put spread I bought will be cheaper. So I lose money on that. But I can sleep well for the next month or whenever I buy the put spread and say, oh, you know what? This covers me through the next earnings period maybe. When do they report? August. May. Maybe I'll buy it in May because early May they're going to report. This way I don't have to sweat the report either. So this is the concept of put spreads to protect. There are other ways to do the spread, put calendar, put diagonals and all of that, but that's a little more convoluted and needs its own video. But that's the concept. So what about now? What about the actual lines that I see now? So for that, I'm going to go a little more granular. 30 minute? Okay. How about 60 minute? Less noise. Okay, this is better. 120? This is okay. So 60 minutes. You can see that there's a definite floor right there with the red lines that I said. If they lose it, they'll start something bad, and then we'll talk about the bigger bad. Okay, so this is on a shorter time frame. But they also have a lower high trend, so it's coming into a wedge, a triangle, whatever you want to call it. The range is tightening, so something is going to happen, either this or that. So if they're able to overcome whatever levels they have here, the trigger lines vary. If somebody wants to chase a trend line break or somebody wants to chase a level break, same concept. So 110, 111 is first piece of good news. Then I'd say it finds some resistance at 115, just under, through 116, just over. So 115, 116 would be my exit point. So if I buy it here for a long trade, a swing trade, or a fast bounce trade or whatever, I would probably start locking it at 116-ish. Definitely here, because this is another ledge. A big ledge is here, 124 to 122. The biggest resistance will come from 135-ish, give or take, because this is where, for this period of time, this is where most of the actions happen. So as it approaches it, the people that traded it, they're going to be actively trading it again. It hits the break. So if I catch a break, I just gave you where I would get out. As far as protection, I just put this alert for myself because that's a clean line. So they either intend on holding it, or they intend on going bonkers as soon as they lose it. Now I have to tell you, it's going to depend on the market most likely. So if the market bounces, then this one's fine, most likely. If the market corrects, this for sure is going to fall. So the markets right now are going crazy, swings because of the volatility. The headlines are insane. They're stupid, but they're insane, and they cause a lot of they trigger a lot of emotional trades, and but the charts never lie. So usually when this breach happens, there's going to be follow through lower, and if this breach happens, there's going to be follow through lower, and vice versa. So this is the skinny on Roku. As far as how expensive it is, whatever I mentioned in the beginning, it doesn't really matter to the levels here. This is a momentum stock, so I don't look for cheap. Amazon was never cheap, and look what a huge win that was for whoever hold it. The problem I have is it sells at 11 times its sales. Okay, so its PE doesn't matter. It's negative. It loses money. But Amazon, people talk about Amazon being expensive. It's really cheap. It's cheaper than Apple. I know you're calling me crazy. So PE is 80, 70, whatever it is. Who cares? It can turn on. It can turn up the PE, turn down the PE anytime it wants to. But the important part, it sells at 3.3 times its sales. 3.3 only. That's a lot lower than Apple. That's like 1/3 that of Facebook, and it's 4 times cheaper than Roku. So what does that mean really? So if somebody comes to you with a business that says, I've got a business that grows 25% a year, and it has been. That's what they delivered in their earnings, and people hated it. Or was that Facebook that they hated it? Anyway, no, they loved it this time around. Okay, so it grows 25 year over year %, and they tell you you only have to pay me 3.5 times the sales. Would you buy it? I'll buy it. Sight unseen. I don't care what they do. I'll buy it. Of course I will buy it. It grows 25% year over year, and you're only going to charge me 3.3 times the sales? Yeah, I'll buy it. So versus 11 times its sales for Roku. That's the only hiccup. So it's put up time, and I feel like the barrier to competition is very, very small. Anybody can do this. Anybody can do this, especially people with deep pockets. I just learned today of another service. I won't mention it here because I didn't verify if it's good or anything. They said, it's an alternative to it, and it works great. So anyway, Nick signing out. If you have any comments or you want to chat, or just hit me up, we'll chat.